Welcome, guys. Today we have on Doug Colkitt, a return guest. We are going to focus a little bit more today on what he's doing now. So go back and listen to the first episode I did with Doug and Benedict if you want more background. But Doug is now involved with Fogo and also building a Perps DEX atop Fogo. So yeah, we can start there. What is Fogo? And also just like maybe outline a little bit of your involvement because it's still like slightly unclear. I mean, you seem to be a little like the public facing shill thus far, but
I am the
public
facing shill. Yeah. All right. So, okay. So I guess to start, right. So like my first and original project with Ambient and, we still have a EVM based, AMM protocol. And then late last year, we kind of, started looking. I think like one thing you kind of learn in for spot world is like spot DEXs are actually not a great business because you're always behind an aggregator. And so you're always kind of getting lowballed and kind of perp DEXs make a lot more sense. And kind of the regulatory stuff was changing. So and obviously Hyperliquid was super successful. So we were looking at kind of getting into that space. And around the same time, I met who would become my Fogo co-founder, Rob Sagerton. And Mike Cahill from Doro and Pith, and they kind of had this idea for a Solana-based, an SVM-based network, where the core idea is right, like you're just juicing the performance. So everything's Fire Dancer, kind of the hardware's bigger, smaller validator set, lower latency, kind of all this stuff to like get Solana performance higher with some trade-offs. So that kind of core idea became Fogo, and then also became something that we were kind of naturally looking at Ambient for like if we really wanted to build like a real Perps DEX, and kind of some of the performance you just can't get on the SVM or even Solana. So I became involved with Fogo there as a co-founder, and then with the core ideas that Ambient would kind of build Perps DEX project that we always wanted to build, and it would be kind of the anchor application on Fogo. Yeah. So high level view is Fogo is basically a blockchain that's built if you want trading on chain. You need to make some compromises from the most decentralized network, but we're trying to make them in kind of intelligent ways. But with the core thing being that like trading, like if you want trading on chain, there are just certain minimum requirements that have to be needed, and we make them where it's necessary.
Why would you make Ambient atop something like Fogo as opposed to running it as just an L2? Like what is the value proposition there?
Yeah,
we're big in Ethereum as well, by the way, and you've had you were somewhat of a thought leader, I would say.
I was a thought. Yeah. Ethereum, I'm not. So okay. I mean, look, there's a lot of things like we get in. Like Ethereum has had like execution problems. I don't think like anyone will doubt that. But like people aren't on Ethereum to begin with. They're on Solana. So like the value of being an L2 is just like not as high as it was. The second thing is like from a trading perspective, like L2s are great. Like you fully like the story of an L2 is like, okay, you inherit the security of the base layer. And like that's true in the context of like I'm transferring USDC between people, or right, like that's true in like the classical blockchain context. But like in a trading context, like okay, having a 10-minute escape hatch doesn't really matter much when you're trading perps and shit's like 100 times levered, and you can like rearrange the oracle prices and like okay, that's great, I can get like my trade in like okay in 10 minutes or whatever. Same thing, right? Like with that settle, like okay, it's great, like it settles to the base layer every 5 minutes. But like if I can reorg a trading chain, and I'm like the centralized sequencer, and I have the power to like reorg within that span, like imagine you go to like NASDAQ and you can just like, here's all the trades like for the past 5 minutes, you can do whatever the fuck you want with them, you can rearrange them, like you could bankrupt a lot of people. So like the L2 security guarantees, I think L2s make sense when you're holding assets. L2s don't really make a lot of sense when you're moving assets.
Yeah, well, like any contracts, really. I mean, like any DeFi contracts for that matter. It's kind of a red herring, honestly. Like the escape hat. No, it is. I mean, anytime like there's any type of time sensitivity to a transaction, like unless you're holding naked, like raw ETH, It's like almost irrelevant. But anyways, this is a bit of a tangent.
Yeah, no, we've talked about this before. No, I totally agree. Like even if you're doing an AMM, if you have like LP tokens on AMM, well, you need to set slippage because otherwise someone can like front run you and do stuff. But if the price is moving, right, like how much slippage do you have to set for, you know, whatever your 30-minute escape hatch is? So like, I don't know. It's L2s have their own issue. I mean, the other thing is like with an L2 for finality, it's longer. Like you have these soft confirmations and that's great. And I think like for most people, that's fine. But like finality is like what exchanges and like probably larger firms care about because they actually have compliance departments. And finality is just like a long time on L2s. If you have an L1, right, you're not you don't have the full economic security of like Ethereum, but like you have some economic security from the Fogo validator set, and you know, you have faster finality, and like we haven't really seen a ton of L1s being like attacked from like a reorg perspective if they have like some minimum level of stake.
Okay, so in your like from your perspective, like this 12 entity validator set is sufficient.
21. But yeah.
Oh, it's 21.
Yeah. Okay. I don't know. Yeah. So it would be around there. Yeah. 21.
Okay. 21. Okay. So that's the Fogo chain specifically though.
Yeah. It's the Fogo chain specifically.
The ambient perps. Okay. Like explain the design. So I have a general understanding of Fogo. Fired answer fork with 21 validators. Okay. Let's talk about the ambient perps for a second. So ambient perps, like explain the design there. Central matching engine, like
so it's actually yes. So it is an order book, but it's slightly different. So it's what we're calling a dual-sided batch auction. And so basically the way it works is like a traditional order book. Orders come, everything's like just pure time priority, which works great if like you're continuous and again like you're the CME and you have atomic clocks and you can exactly down to the nanosecond. In a blockchain context, this kind of time priority thing has been like a lot of MEV, because really what time priority means on a sub block interval is just whoever's at the top of the block. And usually what that means eventually is just whoever pays the block builder the most amount of money, and right, like what's money extracted out of the system. So we're doing this batch auction model where orders, so there's it looks and feels like an order book, like you see an order book and moves around the batch. And there's again like why Fogo block times are important, because these batch auctions are every 40 milliseconds, which are the block times. What happens is they clear every 40 milliseconds. So if orders come in, they clear together at the same price, and that kind of removes some of the front running like MEV type top of block things. The other thing we do is, and it's somewhat similar to Hyperliquid, is there's a quiet period in the auction, so you can quote around an oracle price, and this is why like relationship with Pyth is important. Pyth has like these low latency oracles. Like the latency is very deterministic because the data centers are like close to Binance and stuff. And so as the oracle price moves, right, like you're just quoting around like Binance price or Pyth laser price minus 2 bips or whatever. It's very hard to pick you off, right? Because there's a quiet period where someone's sending an order, theirs is delayed a block, the oracle is not delayed a block, or if you want to quote like your cancels aren't delayed. And so because of that, right, like it's hard to pick off orders, and so therefore the flow is very non-toxic, and therefore liquidity providers, you know, are willing to quote tight and kind of all the other good stuff. So Hyperliquid kind of does a similar thing, right, where they have this speed bump for taker orders, but not cancel orders. And I think that's a big reason why they've been successful. So we're doing it a little bit. I think similar thing, but like also kind of the oracle part is interesting because you can start just quoting around that.
Okay. All right. I want to ask you kind of, I don't know, philosophical question, but that's what I'm going to go with here for a second.
Yeah.
Let's say that there was the opportunity to build the optimal perp DEX in your mind, the absolute most performant, like what would be the idealized version of a perp DEX. But there's one stipulation here. There's no rules. There's no laws. We live in a completely anarchist society.
So, yeah.
Do you put an optimal perp DEX atop a blockchain at all?
Oh, would it be DEX if it's not on top of a blockchain?
Well, just like, and do you put a perp order book?
A perp order, yeah, a perp exchange, yeah.
Yeah.
There's no KYC, or anything like that.
No KYC, nothing. And no, but I guess maybe this question is not very clear. So the point I'm trying to make is
Are you saying? Are you trying to ask should you have a DEX at all? Is that the?
Yeah. Well, okay.
Yeah.
You can answer that first, and maybe I'll pry.
Yeah. Okay. Should you have a DEX at all? I'd say two reasons. I'd say you should have a DEX. One is establishing trust for like a purely centralized exchange is kind of difficult, right? Like if you just hear about a random centralized exchange, like you're probably not wiring money to them. It takes time to build that trust relationship. And so if there are no laws, right? Like, especially if there are no laws, right? Like, okay, they can't even go to jail if they steal your money. So I think that's one reason. That's valid, right? Like FTX exists and stuff. So you have validators, and at least like you have this decentralization of trust, and like the validators, you have your validator set, and you have a number of them, and right, they'd have to collude to kind of do that. So that's one thing. The other thing is like composability. And that's what we're trying to build. Like the Perp DEX is just like a general purpose SVM program inside an SVM environment. I think like kind of Hyperliquid shows that there's value to having like block space is very commoditized at this point. And so having undifferentiated block space, there's how many L1s are there, right? Like the block space just isn't worth anything, but like hyper EVM block space is really valuable because it's next to like hyper core liquidity. But I think we're doing the same thing. It should actually be kind of more interesting because there's no pre-compiles. It's all the same environment. But composability, I think is valuable. It's like, what are the killer composable applications? I don't know. People are building them, like basis type trading stuff.
The thing with the hyper EVM is that they started with the Perp DEX, right? And then they pushed this, EVM compatible, like general purpose chain in the background. But it seems that what they're really doing is kind of just owning their back office, right? So if they really truly want to have all of finance on chain, the notion is, okay, well, this must be composable with, and like, let's own the whole stack, right? But I don't even know if they view this as the real value driver or revenue driver as much as just being able to own the back office. And I don't know, like, so to that end, like you're talking about this composability
Why do you think they're doing it?
Jeff like Posit said he wants all of finance on Hyperliquid, right? And so I don't know. I guess what I'm saying right now is like
the Hyper EVM mortgage broker. Yeah.
Well, what is the like what aspect of composability is a massive unlock right now, right? You still have to transfer between the EVM and Hypercore too, right? It's like an integrated bridge. Okay,
so that's what I was saying. So yes, there's a bridge, and that sucks. But
it's like a mini bridge though. It's like a bridge.
Fogo and Ambient won't have a mini bridge. It will just be SVM, and so it's just an SVM program. It is a mini bridge. I think it's like easier than a regular. I haven't really tried it, to be honest. I think it's easier than a regular bridge. But I think like friction, even small frictions kind of make things a lot harder, right? Like you see that in like programming and like software a lot, like Dropbox, right? Like everyone's like, oh, before like Dropbox came out, like you could just do the same thing. It's like nobody's gonna fucking run their own RSH server or all that stuff. They're just gonna use Dropbox. But yeah, like what can you? I mean, the biggest thing is, right, like you have access to a lot of liquidity that's
right,
pretty fairly priced. You have access to a lot of non-toxic flow, and that's like something that you haven't really seen in even like Ethereum. Maybe in Solana you've seen it a little bit, but like if I just want to like start providing liquidity or like doing something, I want an AMM that like hedges its positions with perps, right? Like that's something that like is hard to do unless you have that composability.
Okay. All right, I'll take your word for it now.
Or like perp spot basis, right? Like that's a trade, like perennial trade. People do like Athena kind of does that, but they have to be kind of like off chain, on chain. Like if your spot book and your perps book are all on chain at the same place, you can run that basis trade like just in a vault, and like instead of like a fund doing that, just a vault does it.
Yeah. Okay. So I think the only reason I'm being a little bit trolly about this is because I think the word composability has been a bit bastardized, or it has like a very broad definition. When I talk to people building AMMs or something like on Ethereum, when they talk about composability, like oftentimes they're referring to atomicity of trades, like the ability to compose, right? Like, and then when we think about composability, when we're talking composability, we may be thinking like having liquidity on Solana, like a single unified layer where it's there's no additional trust assumptions moving it around, right? Apart from application to application, right?
Yeah.
So I think it's almost like a time-based thing, like how you define at composability, right? Like, so that's the only reason I was kind of curious, like, what are we talking about here when we talk about composability?
Yeah, I mean, I guess it's a spectrum, right? Like in the extreme on the other end, like when people make mortgage-backed securities, you have to go and get mortgages from banks, and like those are like different contracts, and you put them in like a bond, and then like there's another market, and like those markets are very, very not composable, and so it's like an 8-week process to take a mortgage and turn it into like a mortgage-backed security. And you could imagine if those were tokenized or whatever, even if they're on different chains, maybe that's a 1-week process or whatever. So like, I guess there's a spectrum, but I do agree with you. Like atomicity is pretty huge. And a lot of people in Ethereum have kind of just hand waved this. Oh, like you have interop has just been like, I think has like broken a lot of people's brains on this concept because they have like, it's like interop's like this magic thing, but like the user experience is horrible. Like it's not atomic, like you say. And so, but like it is a narrative for Ethereum roll up shit.
Hey, Gwart here. I'm running a short survey to get better info on who listens to the show. If you find value in it or listen consistently, can you do me a huge favor and fill out the form? It takes about 30 seconds and helps me and the Blockspace team keep the show running. Thanks. And now on to the conversation.
Okay, I want to go back to it for a second. So again, you started out building CrocSwap, and which subsequently became Ambient. You were working on AMMs at the time. I went back and listened to interviews with you talking about this massive unlock, this new primitive. I'm curious, just your own personal beliefs. Have you changed your mind at all about AMMs? Or I mean, right? Like now you're building this Perp DEX. Like what was that transition?
Perps are hard to do in an AMM context because the nice thing about an AMM is like no matter where the price goes, you're fine. Perps, there's always some liquidation risk, so it's hard for just like LP tokens. I guess you have like the AMMs and stuff, but like they break. So perps are just hard. Any derivative where the losses are unbounded are kind of hard to do in an AMM context. I think one thing that we learned are clubs are almost like a cargo cult. Like people go to whatever their favorite perp dex is, and they want to see that order book, and they want to see it moving around. And if they feel like if you don't see that order book, you're like, this isn't a real exchange. I'm not going here. And so it's like almost like people don't believe that a market's real unless it has clubs. And like that's a cultural thing. And then I guess the third point is I think one thing that Hyperliquid demonstrated, and one thing I always liked about AMMs is like I still believe like the killer application is that you can onboard liquidity from non-professional firms, right? So you don't have to go out and get like Jump or Citadel to provide liquidity and like be really sophisticated and run HFT quoters. Someone can just deposit into a vault, and like the type of person who does that has a lot lower cost of capital, and therefore it's easier just to get liquidity. And the liquidity probably at one point, I mean, like AMMs have issues with toxic flow and stuff. But if you can fix that toxic flow problem, like the cost of capital should be lower, and therefore like liquidity should be better. So I think that's still there. But one thing that's interesting is like you can do a lot of that with like the Hyperliquid vault model, and like we'll run that too, where you have the ability for ordinary people to provide the capital that provides liquidity. The other interesting thing in terms of like what we're doing that's quasi AMM like is you can quote around an oracle, and it's just a lot easier to say like you to show up and say, you know what, I just want to sit and bid -2 bips on Bitcoin and +2 bips on the ask all day long. And if you're filtering out toxic flow correctly, that should generate some returns. How high the returns are, like in a statistical sense, how high the returns are is a question, but right, like that's a cost of capital issue rather than I have to be like Citadel and have like the most sophisticated alphas and like low latency stuff, because it's a constant war of like everyone trying to pick everyone off.
Yeah, I think you come at this from a very technical perspective, and I'm observing from the outside. And what I would say, and I'm just interested to hear your response to this, is that if we go back to kind of the inception of AMMs, like this is a very reductive timeline, but for brevity's sake, I'll explain it like this. People want to trade on blockchains. There was that Ether Delta thing, which was a disaster, right? Okay, that was like closer to an order book, right? People want to trade on blockchains.
It was technically an order book, wasn't it? Right? It was like limit orders.
It was.
Okay.
So, okay, the Vitalik comes up with this blog post about, this is a liquidity pool. You can have these two assets on both sides and they kind of balance out constantly. And so everyone said, oh yeah, well, this makes a lot more sense because blockchains are slow in the case of Ethereum, 12 seconds. And so like, this is the best way to do it. And so we put all this time and effort in like engineering talent and really, really smart people on this AMM construct. Okay. But here's the point I want you to respond to. Then we realized, call it 2-3 years ago, oh, you can just do this on a single server. No one actually really cares. You can centralize the matching engine. You can centralize the sequencer. There's a lot of reg arb that people just hadn't really pushed the bounds up. And of course, there was like some engineering constraints, right, with block times on Ethereum and stuff. This isn't lost upon me. But like a lot of what I'm observing now is, oh, you're allowed to just put it on a single server. Like, oh, you're allowed to just have like 12 validators who choose, right? And so like that would be, and so I just wonder if you've thought similarly with regards to like, we put a ton of, brain power into solving this initial problem, and they may still be useful. I'm not like going to completely detract from this. They may still be useful, but a lot of it was sort of under the assumption that, oh, like the validator set has to be decentralized, right? Or else you're a centralized exchange. And now it's like, oh, do whatever you want, like no rules, like base, largest L2, you know what I mean? Yeah. So I'm curious, like if this is more, so that's what I'm saying. You come at it from very much like technical, like market microstructure. And I'm like, hang on, no, I'll explain what happened here.
I think that's a fair point. I mean, though, to the extent, right, like AMMs, like very simple XYK AMMs, even if there are no rules, like running servers and like someone quoting an order, like that's all operational overhead. And there's a reason that pump fund shitters don't trade on CLOBs. And that's just because like XYK, like smart contracts, are really fucking easy to run. Like you throw it on a chain and like you have liquidity there and you'll have it, you lock liquidity or whatever. And it was like, you'll have it till the end of time. Like World War III could come, like all your infrastructure could get blown up and like that liquidity is there. And like that also means like if you have like an 8K like market cap shitter, like that's naturally it's going to trade on XYK. So yeah, I mean, I think that's a fair point. I don't think like XYK doesn't work because I don't think CLOBs are necessary. Like CLOBs aren't a lot of the problems you have with like XYK and Ethereum. Even if you had a CLOB precompile on mainnet, it wouldn't give you that much because like going back to it, people cargo cult CLOBs, and they think, okay, as long as you have a CLOB, you have like a magic solution to like all this like MEV shit. But imagine you're at NASDAQ and you have 12 seconds to rearrange every, like, it doesn't matter if it's a CLOB, like you have, so Block Builder is the dictator of like this time and like can do all this time travel stuff. CLOB doesn't like magically save you from that. So like a lot of the problems with AMMs come down to like toxic flow, all the other stuff. I guess some of the problems come down to like liquidity is not accurately priced and like that. We tried to push on that on the ambient side for a while, and that does get into a lot more complexity there. But like I don't think like XYK is necessarily a terrible solution, nor do I think like CLOBs are a magic solution. I think if you have 12-second block times and really small blocks, like shit's gonna suck regardless of like.
But I think oftentimes the response is, well, for long tail assets, okay, cool. Well, like for shitters or emerging long tail assets until there's deep liquidity, right? Yeah. But the thing that I would ask is, well, why? Because a lot of times with AMMs we're talking spot assets anyways. Why wouldn't spot trade on CLOB, like deep enough liquid spot trade on crypto CLOBs in the future as well? Like, do you think that will be the case?
Deep enough, like, oh, you mean like 10K shitters?
No, I'm saying, okay, sorry, I didn't phrase this correctly. What I'm asking is, okay, for spot assets, right? Why wouldn't we expect a similar trajectory with perps being on like order books?
Why aren't I mean, isn't all okay? maybe there's a couple answers. I mean, one thing are like AMMs are very cheap, like straightforward to subsidize liquidity. So a lot of assets and ecosystems subsidize liquidity because they want liquidity and they're willing to pay for it. And they can do that directly or indirectly, but like liquidity mining emissions are like the classic thing. So it's very easy to just say, okay, here, like I have $10 million of whatever hard currency and I want this market to be liquid and I'm going to start doing emissions and like an LP model, like a XYK, that's like super simple, right? Like, okay, here's your LP tokens, you earn on top of that. In a club, you kind of can do that, right? There's market maker agreements, and right, like market makers do exist, like token market making agreements do exist, but like those are relatively complex, and like the scope for bad behavior and abuse is a lot harder, or a lot harder to police. So I think that's one answer is like it's just easier to subsidize liquidity, and then the reality is like in crypto, like a lot of liquidity is subsidized. Like even on like bigger tokens, right? Like it might not be subsidized in an AMM, but it's subsidized to like Wintermute or whoever is like is getting paid to like market make this thing.
Yeah. So how do you approach this with regards to Fogo and onboarding market makers and like creating these deep liquid markets off the rip? Is it similar to what Hyperliquid did, for example?
Ultimately, like we want most liquidity to come from ordinary people. I think there's value to having a diversity of liquidity providers, and like you still want like some professional liquidity providers, but I think the vault's actually very valuable. And to a certain, like Hyperliquid now it's down to like, I don't know, a small, less than 10%. I think actually in some sense that's a loss because there are just like liquidity rents that could be extracted. So maybe there's like my AMM ideologue part, but I do think there's value, like when most liquidity or a large part of the liquidity is actually going to like your end users and they're seeing those returns. So we'll have the same vault model. I think we're gonna actually segment into two vaults. One are like for majors and the other for like what we call like frontier assets. And so those will just be like shitters,
What's
like, right? Like,
okay.
well, we want to like, okay, so we want to be very aggressive about like listing tokens early, because what's interesting, like you don't have to be the best at an exchange. You just have to be the first. If like Trump coin comes out and you're the first person to list it. So we want to be very aggressive. And the vault's like very interesting there because you can just turn on the Oracle, and we have a good relationship with Pyth, turn on the vault, turn on liquidity for, whatever the pump fund shitter of the day is, and kind of let that thing trade. So actually, like, I think like the vault's also kind of an important concept just because you can get liquidity where you want it, like very quickly. And, obviously dealing with like an external market maker is a harder move.
The Gwart Show is sponsored by Ellipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. Ellipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design a system to ensure the root construction is fast enough? High-performance challenges are core to Ellipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself, doing over $70 billion in organic trading volume. Now, Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open rules, go to ellipsislabs.xyz/careers.
You were pretty deep in MEV research. I mean, as a function of being a AMM founder, I think, I would consider you one of the thought leaders. Or at least I listen to you. This is one of the topics I listen to you about.
Oh, good.
Yeah. So I am curious, though, like, when was the Flashbot's initial paper released? Like 6 years ago now? I mean, it's been quite some time, right?
Like the first paper, right? Yeah. I think it was before DeFi Summer. Yeah. It was like 2019, I think.
What has been the biggest breakthrough as a function of studying MEV deeply? Like, was there anything that, in the context of crypto, what have we found that was exceptionally profound to apply to market microstructures?
In MEV? Well, so like, what's the most interesting thing we've learned? like MEV.
I mean, I don't know. I guess one thing that is, well, okay, this is adjacent, but something that is kind of interesting that is unique to crypto is flash loans and how flash loans are used. Now, that is a function of being able to create a transaction that either goes through as a with a flash loan or not, and you can repay. You can create a customized transaction all within one, right? Like that's unique in the context of crypto. Now, is that like is this like a massive breakthrough for the world? I don't know, but that's something that I can think of that was it's novel because we chain transactions into blocks together, right? So I'm just curious if like
is there anything in MEV? I don't know. Is there anything in MEV that doesn't really have? I mean, I guess sandwiching doesn't really have an analogy, but that's I mean. I don't know if that's profound, but it's you can't sandwich attack people in TradFi just because you can.
Right.
I mean, I guess the interesting thing about MEV versus like TradFi microstructure is you can rearrange transactions and you can do things where you can see transactions and then do things before them. I guess so. Like one of the interesting things are like the block. Right, like how far does that roll up, right? Like the first MEV was like, okay, I see your transaction, I'm going to try to like front run you and then like or back run you, and like we were just playing at like very small levels. And then people started doing okay, like block building stuff, and like you see some of this like with Beaver where they'll take a trade and then they'll put like all of their, so it's not like a sandwich attack, but like they'll take all of the buys in 12 seconds and all of the sells in 12 seconds. And if they're selling, they'll put all the buys first and then put all the sells after. So they hit like they get executed at like a price that you just would never see if like orders were sequenced, in any kind of, like as they come in randomly. So I guess that's pretty interesting. I don't know though if anything is profound. I don't know. You have an opinion? It sounds like
no. I mean, I was asking mainly because there's a little bit of memory holing almost with this topic for me. Like 3 years ago, everyone was fixated on how do we create fair ordering on blockchains. Like this was the and it was presented as this existential problem, and in a sense it is an existential problem if you want efficient markets, and it can be an existential problem.
It was also kind of an existential problem, right? Because the theory was that the validators who were good at it would eventually earn excess returns and then like control all the stake.
Yeah. So, but now I'm kind of coming back to the point I made earlier and why I was curious if you had an opinion, because my naive opinion is that we have done all of this research, and to me, a very reductive way to say like what I've observed is that Ethereum solved MEV by putting all the transactions on single servers that match your orders fairly or something.
Yeah.
You see what I'm saying? And so it's like all along the solution was, just make sure that it's one person and they're doing it fairly. And maybe there's like some, the way that Time Boost does it or Base does it. Like there's some differences in how it's done, but for the most part.
Yeah, they don't. Yeah, they just really take it in, and they don't show. They don't have a mempool, so they don't like show your order.
And like, so it's like, okay, well, what was the solution all along? We spent 7 years on this, and back to just effectively a single matching engine, right? That's what it seems like to me.
So I mean, right, like it's interesting. Like in a decentralized network, there's decentralized builders. There's like this tragedy of the commons thing, right? Or there's like behavior that's bad for the network as a whole, but is good for the individual builder or leader. And so if you're a single sequencer, obviously like your incentives are like Coinbase doesn't want to burn Base to like make 10 ether in like some MEV transaction. So right, like Fogo, I like tie it back here. Like I think we're trying to do it in L1, but like we have this curated validator set, which basically means, right, like validators can be ejected for abusive behavior. So we are like pushing the social layer thing. It's very difficult in like a really, really decentralized network though, where builders do not have aligned incentives with the network as a whole. Like in an adversarial environment where people are trying to make money and there's like opportunities, and especially when there's high frequency trade changes in value, like this is a very, very hard problem. And so I think right. Yeah. Like solving it just by saying, okay, we're going to just align incentives is a lot easier. Like distributed systems are just tough, like in those environments.
Can you explain examples of MEV on a perp DEX?
Yeah. Well, I mean, look, the simplest one would just be like most of the things that exist in like MEV world still exist in other worlds. So like, you can still front run order. Like you see a big order come in, like market order, you can front run it. And like either in a statistical sense, it's going to move the market, or even you can front run it, and depending how much it moves, you put a limit order in, it gets filled on the other side. You can back run things too, right? Like a big order will come in and maybe moves the price of BTC at a perp DEX relative to Binance, right? And that's probably something you want to trade both sides of. You want to be the first person trading the other side. You can do just-in-time liquidity. So you could insert your order ahead of. So that's all things you can do if you have like MEV, like if you have like the full like Flashbots type access to the order flow. You could also do stuff like censor Oracle updates to like liquidate people. If you can reorg, you could also do like kind of the thing I mentioned where Beaver does before, where like if depending what the block sizes are, take all the buy orders, put them at the front of the block, move the price up so you get like the best entry if you're selling, and then all the sell orders at the other side. Well, you can censors too, right? Like if somebody's trying to cancel a transaction or cancel a limit order, and because it's bad, you just censor it, leave it out of the block, so you hit it. So it's kind of like all the like perp DEX doesn't all the same like kind of shit exists there. That's what I'm saying. Like clubs are not like a silver bullet. And to your point, like a lot of it is just because the way the sequencing is done is like on the social layer.
Yeah. Okay. I want to go back to something you said near the beginning, which I remember you and I argued about this one time in the group chat. And I think you convinced me, well, granted, this isn't really my area of expertise, but I think you convinced me, which I was basically making this argument, right? Like I go on these, we go back and forth on these like insane, screeching. Yeah. And my argument was like, look, 95% of the infrastructure we've built thus far in crypto, and I was being hyperbolic here, but I will run with it. My point was like 95% of this is functionally back office software. And like to the extent that it gets adopted, it's going to be used. You'll have no end users will have any idea that their transactions are, I joke like it's akin to, does anybody think about, TCP/IP when they're on Robinhood or Tinder? Like, come on, right? Yeah. So, but you made this point that perp DEXs are not, and I think it's a fair point, and it goes back to what you were saying initially, which is when you try to do spot assets, you run into this thing where you're kind of just underneath an aggregator, and the aggregator ends up kind of controlling the flow. Perp DEXs, okay, user-facing perp DEXs, especially dumb flow, retail-facing perp DEXs are clearly a valuable and profitable business. What else do you think in crypto? This is just like a random question. What else do you think is able to capture and retain the value without being intermediated or compressed?
Yeah, that's a good question.
Thank you.
No, I mean, like the reason spot assets are fungible, perp assets are not, right? Like I can't take my long at Hyperliquid and go sell it at drift. Yeah. And so the problem, and I'm guilty of this too, like everybody in crypto, like all the nerds in crypto want to build protocols. They don't really want to build businesses. And the problem with protocols are like, they're interchangeable. You just plug in one or the other. So like what we've seen is like the front end is actually more valuable. And so it's, what are things that, I mean, look, like obviously trading terminals, like if you're just talking about pure front end stuff, wallets, trading terminals, all the stuff where you just have the user. And one thing, like crypto users are very, very price insensitive. I think like all financial transactions are price insensitive, but like in equities, you have like Reg NMS, so Robinhood can't like charge someone 1% to trade. But like crypto users are very price insensitive, so you can your trading terminals and like MetaMask charge or Phantom or whatever charges a lot of money, and like nobody cares because they're gonna make 10x on the coin, or They think they will. So like all front ends, I think, are valuable. Like protocols outside perps. Like what protocol?
That's what I'm wondering.
Pump, right? Like locked liquidity, anything with locked liquidity, because you can't move the locked liquidity. So
yeah,
if
that's a
like,
good answer.
Yeah. So if you have something, anything where like people are locked. It's locked in forever. So I don't even know. Is there like another analogy outside like locked token liquidity launch pads where like you just have capital that literally can't leave the platform ever?
Yeah, I mean, there's definitely economies of scale with having liquidity. So, I mean, I do think that is a moat in some capacity.
Is there though economies of scale having liquidity?
I don't know. Look at this is in trading context, but look at Aave. I mean,
yeah, are there aggregators for borrows? Yeah,
you see what I'm saying? I think people. So I don't know. I defer to you on something like this. I mean, I do tend to agree with the protocol
I guess the thing like
actual business.
Yeah, I guess the thing with Aave is like you trust, right? They have like a big,
right.
So like if a market gets hacked, like they'll have money to like reinvest. So I guess like reputation kind of matters there for sure.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Gwart Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Today, Coinbase announced that they're launching perpetual-like futures soon. I don't know what that means.
Okay.
The terminology was bizarre. Coinbase is launching perps at some point in the near future. I think it stands to reason that Robinhood will probably launch perps. How does Fogo compete with these massive brands with massive distribution? I think I'll lay you up for one, being able to list very, very quickly with no kind of regulatory or bureaucratic oversight is probably a pretty big advantage.
Definitely.
You can just throw a shitter on with no regard, right? What else? Like I'll apply the same logic to Hyperliquid. How does Hyperliquid compete with Robinhood and Coinbase in the near future?
Yeah. So, I mean, one thing about like financial market or financial products or like their Pareto distributed. I think it was actually Hasib made this point one time. I think I heard it from him first, but like how many customers does like Goldman Sachs have? Not a ton, because just a very few customers generate like a huge amount of the P&L, or like right. Like it's not like an iPhone, right? Like Apple needs to sell to 1 billion people to make money. Perps, like a very small number of users trade like an enormous amount. And versus, the average person on Robinhood. So that's one thing. Like Hyperliquid doesn't have a ton of daily active users relative to Binance, but the ones they do have trade like a lot. So they're at 10% or whatever. And obviously the people who are on chain care about that. The other thing is like Coinbase has had like a lot of people who are like Coinbase is like has distribution successful, but like a lot of people who are kind of a similar point, but like who have dealt with Coinbase for a while or Robinhood or whatever, like they'll freeze your assets, they're like hard to withdraw stuff. So it's like people lose trust. This is the first place people go, but like people lose trust in them over time. I don't know. We're thinking a lot like how do you get where do people go to make their first trade? So like Hyperliquid, I think, has done very well in the pro set. Fogo, we do want to kind of focus on like getting people earlier. I think there are better like on ramps and stuff now, and you can get distribution. And also the other thing is like Coinbase is kind of siloed, and it's just the US, and right, we can get distribution in Asia, we get distribution in North America, kind of all that stuff. So it's not an easy answer. Like obviously they're tough competitors, but I just think kind of the on-chain thing is there's enough reasons to do stuff on chain versus like giving all my money to Coinbase, where Like, I don't think like they're necessarily going to kill like the on-chain market.
How much does the UX and everything that comes along with, like, say, a retail trader trading on Binance versus Hyperliquid, how close does Hyperliquid or Fogo or any other perp DEX need to be to Binance? The reason I ask is because I think there are people who say that no KYC is like a massive unlock. Like that is one of the massive unlocks. And the only thing that I would push back on, and maybe we just have to kind of wait to observe, is that massive institutions and market makers, like two sides of the deep liquidity markets, like they don't give a shit about that.
Actually, the opposite. A lot of them won't touch things where there's no KYC.
Okay, yeah, exactly. But right, but these are the people who make really, really big markets, oftentimes.
They do make big, right? But like it's two-sided, right? Like Jump and Citadel don't want to just trade with each other all day long. Right. So if you don't have like the random degens there, you'd be the most institutional friendly like market in the world, and it's just like big trading firms beating the shit out of each other all day long. So yeah, it is like this weird dance though, right? Like you want the degens, but right, there are certain things to get larger traders comfortable with. I would say if you have a retail flow, look, like Binance technology is not great. Like people complain about all that. There's like weird stuff they do, like feeds just drop randomly. Like you'd ask anybody who's at a trading firm, like, or any crypto exchange, like, or FTX was like notorious where they'd say your order was canceled and then it would be filled like later on. Like if there is retail flow somewhere, trading firms will deal with maybe not infinite bullshit on the technology side, but they'll deal with a lot of bullshit. Like they're paid well.
Yeah. What do you think about the concept, another buzzword I hear, of verifiability? Like I don't know, this is like composability in the sense that you could just, so many ways you can run with what this means. But I think recently in the context of clubs, I guess verifiability has been thought to mean, you can visibly, if you have see that you are being fairly treated, right, in some capacity. Is this a massive unlock itself? Like what do you think of this term, verifiability?
I think actually the concept's pretty important. If things are like really dark, it's hard to know if you're being cheated, and like that matter. So even if like a blockchain, I mean, to be honest, like L2s are really just verifiability, because until they actually commit to, like, a block in an L2 isn't a real thing. Like it's just a make-believe concept. Like what is a base block? Base block is nothing. It's just the sequencer's confirmed that something's out there. When they go to commit, like they could do whatever they want, but they don't, because they already verified that there were some transactions that did this and kind of committed in a social sense to it. So I think like verifiability is just, there is some social commitment. Like we've done this, and like, yes, there are no like crypto economic penalties around it. But if we go back on it, we'll be a liar, and then people make fun of us on Twitter, and that's not great. So yeah, I think it's definitely an unlock. The issue is though, people assume it fixes everything. There are a lot of things in like a market or club or any type of market where, okay, it's verifiable. Like, okay, we can see that the transactions are coming in and you're respecting the ordering and stuff. But there's stuff you can do at the network layer. Like I can slow down your packets relative to my packets, and they're like, we'll still show up fine. We'll still look fine. But like, obviously I'm favoring myself. I could look at your packet first and then put my packet in. So I could even like front run and stuff. And so even stuff like TEs and stuff, maybe this is a bit of a tangent, but they're like, oh, TEs like solve everything, or ZK solves everything, because like the rules always have to be followed. But there's stuff you can do at the network layer, even before stuff arrives at that verifiable stage where like you can really screw people, especially like in a fast moving market.
Yeah. I think you had a slightly different opinion about the big James Nguyen trade. I think so. You can fill in the like blanks here because I kind of already forget. But I think one point that Jeff was making from Hyperliquid was that you actually want to broadcast massive transactions because you come in and provide liquidity at that price, and you're actually, and the corollary was, well, every time the ETFs trade at 430 or whatever, they get very good execution because market makers come in knowing there's big blocks, right? And I think you had a slightly different take.
I had a bit different take. So I think the point Jeff was making, like, it is logical, and there's something to be said for that, and that effect exists, at least in some sense. Generally, though, so there's actually like decent studies on this, not even from crypto, just from TradFi, where like a lot of exchanges will like normally exchanges are anonymized, so you don't see who the orders are. There have been certain exchanges in like Europe or wherever, like different exchanges where they switched from anonymized to then they put the trader codes in the order, or various other things where markets became more or less anonymized over time. And typically what you do see is that it's not disastrous, but like as markets become less anonymized, like typically the market quality by, liquidity, spreads, like all kinds of the metrics you'd associate it with, typically like market quality does tend to suffer as markets become less anonymized. And it just seems like a pretty consistent empirical result. So like I do think there is an effect like what Jeff said, but I think there's also a countervailing effect where when things are very visible, it becomes very easy to reverse, not easy, but very easy, but easy enough to like reverse engineer trades. Everyone trades with position limits. They only have so much capital. If you can kind of get a sense of how much someone has, you can kind of push their positions back and forth, and that happens. And even like to the ETF example, like a lot of times you do get good execution, but like a famous counterexample to that is when the VIX ETFs blew up in 2016, the Volmageddon thing, where VIX spiked, and then you had like the 2x ETFs, and everybody knew they had to rebalance at this time. They had this massive portfolio, and like, okay, yeah, it didn't end up happening that all the capital was there to go on the other side. What happened is everyone's like, well, fuck, this thing's massive, and the market probably can't absorb it, so I'm going to do the opposite. And they blew up the ETFs. And it was like, whatever, $10 billion hole in the market. So it is logical, but oftentimes like the markets just don't behave like that.
Okay, now I'm just asking random questions. What do you think of 24/7 markets? I don't know. I mean,
I like them
24/7, but
yeah, I think they're good. Yeah. So we want to do, because we have to like all the pith feeds and stuff. So yeah, we want to do TradFi stuff. So yeah, I think they're really cool. You should be able. Why not trade it anytime you want?
Yeah, I guess I don't know. I think some of what I've heard is massive drops in liquidity overnight when Americans are asleep,
there's a lot
and then
lower.
when Asians are
there's
asleep.
a lot lower liquidity, but like when a market's closed, there's zero liquidity. Like a closed market is just an empty order book. So
yeah,
like I'd rather have some small amount of liquidity than zero. I guess the only thing is like price moves, and then people look at the price and might margin call you or whatever. But that's between you and your broker.
What do you think? It seems that everyone's kind of coalescing around this idea that perps are a massive unlock, a new primitive that we've all decided can make money and is genuinely novel. What do you think is the trajectory? Are we putting everything in Perp-ify, Tesla, Apple?
Yeah. I mean, this is interesting, right? Because you had like futures in general, and they were always just like, the point was like you had to get stuff to, like, futures were actually about physical delivery. Like I want to buy, so much oil at a certain time. And then in the 70s, they figured, hey, we can do like financial futures, S&P 500 or bonds or whatever. And then become a tool for speculation. I think perps are just another example of that. In the US, we probably would have there are actually regulatory issues around single stock futures for a long time. Europe, they do have like single stock futures. They're not huge, but like I don't know how degen like European retail traders are compared to American traders. But yeah, I mean, I think, look, they're very good. They have a ton of product market fit. People can take leverage on them. Like they're simple to understand. Like it's hard to see. I don't know if you have perps in your 401k, but if you're just punting on stuff, it's hard to see like what's a better form factor.
I think that perps are more fun than like 0-day options. And I think that retail would But I don't know. I heard somebody talking about this recently. Like, I think there's a massive amount of overlap for what it's worth. I mean, once you introduce those people to perps, I think they will be interested. Whether or not they'll prefer them, I'm not sure. But it seems to me they'd be interested. But like, what are your thoughts? Because those are people punting, right?
I think 0 days. Yeah, I think 0 days are almost just right because you don't have single stock futures and you have limitations on leverage and equities, and people trade options for like the implied leverage, and like nobody ever had 0 days, I guess like 30 a week or whatever, 30 days. I think like 0 days are basically if you can only trade options and you want the most perpified type option, then you're gonna do a 0 day because there's not much like gamma, or I guess there's a lot of gamma, but there's not much like optionality here matters. You're just kind of getting extreme leverage, right? So it's like that's I think right, that's a sign like if people are trading 0 days instead of 30 days, like they just want perps.
Yeah. Okay. Couple more questions. If Ambient Perps wins or is very competitive with all of the other perp DEXs, centralized and decentralized right now, why does it win in your opinion? Like what is the big unlock that Ambient Perps has? Like incentivize somebody or sell somebody on trading on Ambient Perps when they launch eventually? Points or outside of points?
Yeah. I think the biggest reason is we have a fundamentally different market structure. So we have this dual batch auction thing. Everyone's talking about clubs right now and how clubs are this big unlock, but I do think actually this market structure is kind of the next step there. And so it unlocks two things. Like one is from a liquidity, a lot more people can provide liquidity. The barriers are a lot lower. Kind of the toxic flow issues are, a lot of those issues are fixed, and it just becomes a lot easier. Like anybody can be the market maker. It's kind of like the tagline that we're using. So that unlocks like a lot more liquidity, especially like in assets where people don't necessarily, large trading firms don't want to trade. So we have the vault, but like anyone can just run kind of their own market maker strategy, and it should be pretty competitive, which means more liquidity in everything else. So that's one aspect. The second aspect is we really, as far as I know, like we're really the only perp DEX is really integrated with the rest of a general purpose blockchain. So even you have Hyper EVM, but like there's this pre-compile. It's not easy. And it's also Hyper EVM is not super scalable. So it's like a full Solana like Fire Dancer, like 10x the throughput of like Solana, like all this other stuff. So it's very easy to build on top of us, like in the Fogo ecosystem and integrate in. It's just a Solana program. So I do like, I am bullish long term on like Perp-ify, and I think like a lot of things will eventually move there. And then the third thing is I think we're gonna have a pretty wide coverage of assets, like not only long tail assets, TradFi assets. So I think like one way we win is just, you want to trade stuff and you just show up to Ambient, whether that's crypto or pump fund shitters or gold or whatever.
When you say we're going to have TradFi assets, how? Like you're doing this in a regulatorily ambiguous way?
Well, so you're from a regulatory. Well, okay. So single stock futures.
No one cares now.
You can definitely do stuff like gold. You can do gold, right? Like commodities. Yeah. You can do equity indexes are like pretty okay. So there's a lot of things like you can do. It just depends. Like it's a curve.
Wait, where does gold get? Where is the gold perps? Like where's that Oracle price coming from?
Where does that come from? It's like the Pith.
No, but I mean like the actual. I mean, where are they pricing gold from? Out of curiosity.
Yeah, that's a good question. Probably, I don't know if it might come from the CME gold futures. Yeah, I would guess. I'm trying to think like what the most liquid market is. Look for currencies.
But does gold doesn't trade 24/7 on the CME, does it?
It trades like 24/5.
Okay, interesting.
Yeah,
because I know like Ostium. Is it called Ostium or Ostium?
Yeah.
They have gold, but those markets close, or like a lot of those markets close during regular or like off trading hours.
Yeah, a lot of them. Yeah, so it's difficult when you don't have an Oracle outside trading hours, but a lot of there are more and more like OTC markets after hours now, and so you do have like some some pricing, especially like FX, like stuff will trade over the weekend and stuff. Like you do have like some pricing go off of.
Also, what even happens now if Hyperliquid just threw out like 20x Tesla perp on? I don't think anything happens. That's the thing, right?
You think anything happens?
Yeah. No, not really. Also, I think that like Mirror, I guess Mirror, they actually really did come after them. They got really like the SEC got actually mad at them.
Yeah, no, actually what Do Kwon got when he got subpoenaed on stage, it was about Mirror.
That would make sense. But Mirror is kind of interesting because it was, I mean, I don't know about the pricing, but it was like fully collateralized in a sense, you know, whereas perps are just like a feed. So it's kind of I do wonder if they're okay with that, but I don't know why that would be a big deal. Like I would love to see Hyperliquid or a perp DEX just see what happens if you throw up,
if you throw up Tesla.
Yeah.
What do you think people want to trade Tesla? Yeah, probably Tesla. Coin.
Yeah, Coin, MicroStrategy. I would trade MicroStrategy perps. It's like the most inception level like asset to like wrapping of assets ever. But people would definitely trade these Bitcoin treasury companies on perps. Like, come on, all the good assets now people want to trade on centralized exchanges. Like, people are mocking everybody equities. Everyone's getting mocked for like, oh, you missed a circle trade. It's like, dude, there was no like connect wallet button on.
There's no connect. Well, there you go. There's something composability matters, right? Like,
no, that is a big. I mean, look, I concede that there's valuable things. I mean, being able to press connect wallet with no arduous. I mean, I think that stuff is clearly valuable.
Even just even if you have a brokerage account, like it fucking sucks whenever I move money from like a brokerage account to a wallet. Like, you have to wait. It's annoying.
Yeah. Crypto is the future. You really sold me. All right. Well, when's Fogo launching? Or have you said yet?
We have our public test net's coming out in July, and our main net end of Q3.
And will Ambient Perps launch in conjunction?
Ambient Perps will be there on day one. That's our flagship application. So we're really excited. Give it a try. We think we'll knock your socks off.
Hell yeah. Good show. All right. Where can people find you?
Twitter. So you follow Fogo at Fogo Chain on Twitter, and there's a cool Discord, Ambient at Ambient_finance, and my personal Twitter is 0xxdoug.
Oh, you still got the 0x. Okay, that's okay. That's
our Mert has it too, so he's like the most Solana maxi. Yeah.
All right. Well, thanks for coming on. It was awesome.
Awesome. Thanks for having me.